This video is for anyone who build products, designers, PMs, and founders, or even engineers. If you have ever shipped anything and later you realize that this problem was tougher than we realized, then this is really for you. And you can relate to this. So, hi, I'm product designer. I build products every day, and sometimes the smallest feature teaches you a biggest lesson. So the story started with one simple request, and the request was, can we add refunds? Sounds easy, right? Well, it wasn't. And solving this one problem completely changed how I think about product design and systems. So without wasting time, let's get into it. So to understand this refund problem, right, let me take a simple example. The example is, let's say you consider yourself a owner of yoga studio, right? And in yoga studio, you are offering different things. What different things? You're offering some classes, you're offering some courses, and in month or in year, you also organize some events or maybe workshops, right? Now, in this, for understanding refund problem, let's take a course example. Let's say there is a course. The course is, the name of that course is, let's say it's a power yoga course. It's a power yoga course, and the price of this course is, as of now, let's assume the price of this course is 5,000, right? So this is the thing that on which we will be working on this refund problem. Great. So we are done with what is the scenario. Let's assume this course was taken by some student, not student. Let's say we have some client A. Assume client A. Let's say we'll assume the name of this client. Let's say the name of client is Kale. So Kale is a client who buys this course at rupees 5,000. At rupees 5,000, right? And as soon as she buys it, she started attending this course, right? Start attending this sessions, right? Now let's assume that Kale stuck in some emergency, or let's say she don't like the course quality or some etc reasons, and now in this case she wants her feet for and in this case she wants her feet refund, right? Now she already started attended that course. Now let's assume that this yoga studio has some refund policies as well. Let's say they have 500 policy that, okay, if you cancel it, you need to pay 500 extra, and she already started attended. Let's say she attended few of the sessions, so let's say that cost of is 1,500, so it's in total it's 2,000, right? So now to refund to Kale, how much we need to refund? Total was 5,000 and minus 2,000 that we get from here, sum up of how many attended plus based on the policy, the refund policy. And in this case, we need to refund 3,000 rupees to Kale. This is the problem statement. Now, in this case, we just need to refund to 3,000. Is that a problem? For businesses, yes. So what is the problem now? How it works? Problem here was that the money that we are getting was tightly attached to the invoices. Attached to the invoices, right? This was the problem. Now you will say, how is this the problem? Before understanding this, let's understand one thing. And now in this case, this refund feature is for service-based businesses, not the product-based businesses. Now why I'm saying this? Let's say that product businesses are there and we have service businesses, right? In product businesses, when invoice is generated, right? When invoice is generated, their work is done. They are done with the product. If user, let's say they don't like it, they can refund it. That's a simple problem. But in service businesses, when invoice is generated, that business works just started. Why? Because let's say in services, let's say it's an appointment, it's a 1 day appointment, it's a 1 week course, or it's a 1 month classes or courses, or maybe in some cases it's an year. So in this case, their work just started. In this one day, in this one week, month, anything can be happening. And being a business owner, you need to make sure that everything goes right. So in this case, refund is little tough than product-based businesses. Right now, come to our problem, that how it works. Now, money was tightly attached to the invoices. Now, okay, now let's understand this problem a little deeper. Right, let's say, so when someone paid, right, let's say Kale, our client, who just paid us 5,000 rupees, right? So basically what she did a payment, and we directly attached that payment to invoice. We directly attach that payment to invoice, right? So now let's say we need to refund 3,000 rupees. Now let's say we need to refund 3,000 rupees, and here's what will happen, right? So how we will do this? If you don't have a platform like this, whatever I'm trying to make it up now, what you will do, being a business owner, you will do simple steps. The steps will be: number one, you will go to invoice, you'll update that, you'll update the invoice. Based on that, you'll edit the payment, right? Let's say the previously that invoice was of 5,000. Now you edit it and you make it 3,000. Sorry, you need to make it 2,000, because 3,000 you need to refund it. So 2,000 you'll make the invoice. And for up payments also, still before it was 5,000, now you need to make it 2,000, right? And after that, you need to recalculate your balance sheet. Recalculate your balance sheet. Now, why I'm saying balance sheet now? Balance sheet is what? The total revenue of that particular business, right? So I need to recalculate that. Let's say I already have 10,000 in my revenue, right? And I added 5,000 of this when Kale buy the course, and now I have 15,000. Now I just updated the invoice, I just updated the payment, so I also need to update this as well. So I need to deduct 3,000 from here as well. So I need to pay. So my net revenue will be 12,000. That's what will be, right? And so, and fourth point will be what? So there is no step, no clear state will be there. We'll never get to know which invoice is at which state. Is it refundable? Is it refunded? Or is it paid? Or what it is, right? We didn't get to the status of that particular invoice, right? So, and also fifth, that's the most important thing. So there will be no structural financial documents, no structural financial documents. And when I'm saying that there will be no financial structure documents, in this case, anyone can come to your system and make some conflicts with your payments, and you will never get to know what happened, because you don't know the total amount. And if someone did some personal thing, and here also the most of the money laundering cases, you can take it an example as a money laundering case, right? And this is really, really wrong thing. So being a very trustworthy platform, we need to make sure that whatever we are doing, we are making the systems around the money will make it very confidently and very trustworthy, right? And this way we figure out one simple thing. What the thing was, that money that anyone clients are paying, money has no neutral state, right? Either it's attached to the invoice or it doesn't exist. Either it's attached to an invoice or it doesn't exist. So this is a bad financial system. A bad financial system. This is what. And this is a dangerous one. Now, the shift is that introducing something as the source of truth. Now, this we come to the solution. We changed a little architect. Now, how we did this? Instead of now I'm talking about the solution, right? I hope you understand the problem. Now the solution. So in this, we just change a little architect of the money involvement. So instead of what we were doing is that whenever we get the payment, we attached it to the invoice. We attached it to the invoice. Now we redesign it. It's going with this now. Okay, so we redesign this. How? We, whenever payment, we receive the payment, we added some box here, and then it goes to the invoice. And this box is a neutral state, a neutral state. So can you guess us what it is? This is what it calls as wallet. This is not a new terminology for you, I believe, because most of the apps nowadays have a wallet. And I'm telling you the use case of wallet. Now you understand why most of the apps have these wallets, right? So now wallet becomes the canonical state, the canonical container. So we introduce a wallet here. Now let's replay the same scenario that we were discussing about. So now let's replay it. Now, step one come. Step one, what? Kale, our client, Kale, she buys a course. She buys a power yoga course, right? Now let's say she did a payment. What was the payment? It was 5,000 rupees. Now it goes to wallet, right? And now wallet has 5,000 balance, right? And after wallet, it goes to the invoice A. Let's assume this as an invoice A. Most of the companies have invoice numbers. I mean, most of it. It needs to have an invoice number. So they have something like random letters and then some numeric values. So this is where they have the invoices. So let's before like without going into this, we just assume this is invoice A. So Kale gives the payment, it goes to wallet, and now it got attached to invoice A, right? Now what invoice A shows? Invoice A shows now total 5,000 rupees. Great. And wallet shows, because we already deducted money from the wallet. Now for wallet, what is the available balance? What is the available balance will be 0, because we already deducted from that, right? And this invoice, the status for this invoice will be that it is paid. It is paid, right? Because the course was of 5,000, Kale pay us the whole amount, the invoices. It can be partially paid, it can be overdue, it can be pending. Many statuses can happen for the invoice, but in this case, our invoice is paid, the fully paid. Now here, everything is reconciled. Everything is reconciles. Great. So now let's come to step number 2. We are clear with step number 1. Step number 2 is, like, let's say business decided to refund the amount. I mean, why business if decided the client asked for the refund and they need to refund 3,000 rupees. Great. Right? Now let's replay the same scenario. Right? So what will happen if we have a wallet? So invoice A we had, right? From invoice, we will edit that and put that money to the wallet. And now available balance for that wallet is 3,000. Great. And here's come the important part. Every time when something got edited in invoice, the credit node generated. Credit node generated. Now, what is credit node? Let me tell you. So, what is credit node? Let's say, let me add a definition here of credit node. So what is credit node? A credit node, I'm calling it as a CM, also known as credit memo, is actually a financial document, issued by the seller, issued by the seller to a buyer, when goods are returned, goods are returned, or when there is need of any adjustment in the invoice, in a invoice. So we created a credit note, not we created a credit note, the system generated the credit note. Now why this is one? Because in the real accounting, if you reduce amount or revenue from the invoice, you must document it. So the system generates a credit note. Now this credit note is directly linked to who? Linked to invoice A, right? And the amount of this credit note is 3,000 rupees that we decided to refund, right? And reason of this refund is the reason of this credit note is that we want to refund it, or maybe there is some service adjustment, right? And what else that credit note can help? It will definitely help in date and timestamps, because in money date and timestamps are too important. And this credit note also have some unique reference number, like if we have invoice number, this credit note also have the reference unique reference number. Now this gives the business context, that how much was reversed, why it was reversed, when was it reversed, and now and how we will do it. From being a product designer, how will you do it in the UI wise, right? So you get the system design, how you need to put it, right? Whenever you decide it, now let's say what will the flow of that, if you are working on the flow of on the UI flow. So if I talk about the UI flow, so you must have some uh, in invoice, you have some refund option. So user goes on that, business goes on that, and click on refund, right? On refund, you open up the pop-up. What pop-up? In that pop-up, you ask for the amount. You say that okay, enter amount what you want to add, and that amount will be less than or equals to the actual actual invoice value, right? And you can also say, to make it more efficient, that what is the reason of this refund, right? Or maybe if you know the reasons, if you know that these can be the definite reasons, you go for a drop down option. You say that okay, if there is a refund thing is going on, they don't like the thing, they don't like the quality, they want to service adjustment, there is some other things, so you show those options in the drop down. And if you're not sure that what can be the reason, you just give a message box, and business can write their reason there, and this reason will be directly intact to the credit note. So even after years, if business wants, oh okay, there is invoice value is 10,000, and now I only have 5,000, right? So what they do it, that credit note will be linked to that invoice, so they can directly click on that, and they will boom get to know that, oh okay, we actually refund this amount, or we did some great, we get to know about the credit note. So now what's the scenario is, after step 2, what we have. So after step 2, what we will get, the original amount of that particular invoice, which was that invoice A. We had 5,000 rupees, the value of invoice A. Credit note got generated of rupees 3,000, right? And now the updated value of invoice A, that will become 2,000, and this you can actually sum up in your net revenue, right? And this is what you get, so no confusion is there. And we have wallet also, which also includes a 3,000 rupees. So no confusion, only clarity will be there. So no confusion, no silent edits will be there. Great. Now let's move to step 3. We are just talking about refund. As of now, we just shifted money from invoice to the wallet. Where is the refund? So this step 3 is about the refund. Let's talk about this now. So now, what can business do with that wallet amount? This is the step 3 question, right? I'll add this now. What can business do? What can business do with that wallet amount? Right now, they have two options. Now business have two options, option A and option B. What are the options? Tell me. Okay, this is not live session. Let me very good. Okay, option A is, what will the option A? Refund to the original source. Right? Refund to the original source. Right? So we had a 3,000 amount in wallet, that will redirect it, that will refund it to the bank, to the Kale's bank. I would say Kale's back. Great. Now, there are three things that happen. What? Ledger entry got created. Ledger entry created, right, for the for the future records, right? Invoice is already adjusted, right? So we don't need to worry about that. It's already adjusted. 3, credit note. Credit note already exists thanks to the wallet, right? And finally, with this thing, what happened? Money, the important thing, actually leaves the system clearly. Not clearly, I would say cleanly, without any mess. So this is option A. What is option B? Option B is that, let's say Kale has her son, right? So she wants that, okay, whatever amount I have, let's just adjust it to my son's invoice, whatever that son enrolled into, right? So she wants to reuse that money in some adjustment. So let's say, so I'll just write it, reuse that money, right? They can directly keep it in the wallet only. That's also a case, right? For further use, they can use it. If they want to come back and purchase some other course, they can do it, right? But they want to reuse the money now. So what will do? Wallet, we already have money of 3,000, and invoice B is there, right? And we just added that 3,000 to invoice B. Great. Now, what happened? Invoice B is partially paid. How partially paid? Now, this is the scenario that we discussed previously as well. So, partially paid, let's say the invoice value of invoice B was 5,000 rupees, and we just added 3,000. So, 2,000 is still pending. We can't say that this invoice is fully paid. So, what it is? The state of that is that it's partially paid. What else happened? So, in this case, no external refund needed. No external refund needed, right? Because it's just solved internally only, right? And this whole option, this reduce unnecessary cash outflow. And this is a really good statement for a healthy and trustworthy financial system. Great. So this was the problem. I actually talk about that why this flow is so powerful. Because, okay, let me give you the notes, right? So that you can take it whenever you needed this. So why this flow is so powerful? There are basically few points. Because number one, that money always have a state, always had a state. It's in a, even if it is in a neutral state, that is a state, and for money, state performs a really good role. What else? Every reduction that we did, every reduction that we did, it creates a financial, it creates a financial document, right? What else? No invoice gets silently edited. So no, so no one can cheat on the invoices because credit note will be generated. So businesses have accounting context. Businesses have accounting context via what? Via credit note. So if I have to summarize this whole problem and solution in just 2 to 3 lines, I would say that we didn't just add a wallet. We introduced financial discipline into the system. This is the conclusion. Great. So that was the whole story, which we were thinking that it's just a small refund feature. It's end up just like that how money will behave across the entire platform. The biggest takeaway for me, the biggest takeaway from this whole process was really simple. The thing was that if systems are clear, the platform becomes trustworthy. And that's something that every product team should care about. And in the next video, we'll take up this entire exact same journey and we'll try to convert this into a case study, a senior level case study for your design portfolio. Because building good products matters, but being able to communicate your thinking matters just as much. So I will see you in the next one. Namaskara.